Hello guys, this is Ali Solanki and today we'll be talking about how to pick stocks. Now this is episode number 2 in the stock market series. So make sure to watch episode number 1 before this and let's start with this video. So in this particular video we'll be talking about the general way in which you can pick stocks. Basically we'll be doing a fundamental analysis of a stock and we'll be deciding if we should buy that stock or not. Now of course I'm not a financial advisor, so do not take my financial advice, but rather just learn how I do all of these things, how I do fundamental analysis, and let's start with the video. So the stock that we'll be talking about is ITC. Now ITC, if you don't know already, it is an FMCG company and it produces some of the biggest goods that you consume every single day. Some of ITC's products include Yippee noodles, Ashirwad Atta, Dark Fantasy, that's my favorite one, and a lot more. So we'll be talking about ITC over here and let's start with the video. So this is ITC stock that I've opened up in Grow app. Now of course you can open it in any of your preferred apps wherein you can get all the financial data of a stock. Because I'm a user of Grow, I'll be using it over here. So over here you can see ITC has grown by 53% in last 1 year, and there is a major reason behind this. Now the reason is ITC is an FMCG stock. What it means is it sells essential items. Now if you see, during the lockdown period everything was closed and only essential goods were able to be transported or bought, and that is why ITC sales did not stop. So let's look at all of the figures and let's start looking at the financial data as well. So over here I would see its profit and loss, balance sheet, and even its cash flow. So over here let's talk about each one of them in detail. Now again, just to mention, you can search it up on Google and you would find a ton of websites that provide this data, but I'm currently using the Grow app because it's convenient for me. So over here we have two options, one is quarterly and yearly. So first let's look at the quarterly reports. Quarterly basically means 3 months report. So from September to December this was the report, and then from December to March, and then June, and then September, right? So it basically divides the year into 4 equal parts. Now after each period ITC has to report its financial data, and that is what you're seeing over here. Now we will be analyzing this. Now over here you can see that the general trend in revenue has been quite steadily growing. In September 2021 it was at around 14,800 crores, and in September 2022 it grew to around 18,608 crores. So with a general overview, this means that the revenue part is good. We can even switch to yearly reports, and over here you would be able to see that even the yearly report is quite good. It has been growing quite steadily over the last 5 years, and especially from 2021 to 2022 its profit grew quite a lot. It grew by almost around 12,000 crores. So revenue part is good. It has been growing steadily over the last few years, but revenue alone cannot justify a company's growth. Revenue basically does not account for the expenses that you need to pay off, right? So over here we have expenses as well. We can see that even the expenses have been growing quite steadily. So it means that ITC has been cashing out a lot of money in order to grow its revenue. As you can see, from 2021 to 2022 its expenses have grown by roughly 9,000 crores. So the next one is EBITDA. Now EBITDA basically stands for earnings before interest, taxes, depreciation, or even amortization. So this will give you the total earnings before any of these things are deducted from your earnings, right? So over here you can see that earnings have been growing quite steadily as well. However, in 2021 it saw a rapid decline from 17,500 crores to around 15,000 crores, and now it has recovered back to 18,800 crores. So earnings have been growing quite steadily as well. Now the next part is EBIT. EBIT basically stands for earnings before interest or taxes. So over here depreciation and amortization is not taken into account. Now these are just some fancy terms that we'll be talking about later in the series as well, so don't worry about it. Right now we'll just be seeing how to see all of these things and learn about these terms as well. So the first thing that you notice is EBITDA generally follows a similar trend as EBIT, right? So over here you can see that EBITDA, it was around 15,600 crores in 2018, and again Ebit also went down in 2021 by around 2000 crores, and then it bounced back in 2022. So again, EBITDA and Ebit follow a general pattern and they follow a similar trend. Now after that we have profit before taxes. Now profit before taxes again would be similar to Ebit. You can see that in 2018 17,000 crores was its profit, and it dipped down to again 17,900 crores in 2021, and then it bounced back in 2022. So by just seeing this much amount of data that we have on our fingertips, we can notice that ITC was not performing as well in 2021, and in 2022 it bounced back. It again is going on the same trajectory as before. Now of course the reason for that is unknown, and you would have to research about that in order to understand why ITC was not performing as good in 2021. And now let's jump over to the net profit. So net profit is basically the profit that you get after deducting all of the taxes, all of the interest, all of the things. After deducting it, this is the net profit that ITC made in 2022. So 15,000 crores. If you just want to put it into perspective, it basically means that after selling close to 65,000 crore worth of goods and services, ITC generated a profit of 15,000 crores. So the rest of the amount went into expenses and paying off taxes and all of those other things, right? So expenses, they paid off around 46,000 crores. So if you just subtract the expenses, which is 46,000 crores, from the revenue, which is 65,000 crores, you would get close to a figure of what is written over here, which is EBITDA. So EBITDA basically is revenue minus expenses. Okay, so we have seen the most important part of the financials, which is profit and loss. We can see that ITC is doing quite well when it comes to profit and loss. The next thing that we want to talk about is balance sheet. But wait for the cash flow part, because ITC is known for its cash flow. It is known for not having a lot of debt because it is in FMCG sector. It actually generates a lot of revenue, and that's why it has a very good cash flow as well. But let's look at the data and let's see what it says. So over here I've switched over to the yearly balance sheet, and here I can see there are total assets and total liabilities. As you can see that assets are currently at, so 77,000 crore worth of assets are currently with ITC, and this basically means all of the infrastructure, all the buildings, all the manufacturing hubs, every single thing is taken into account in this particular figure. After that we have liabilities. So liabilities are basically debt. This is most likely to be banks or other financial institutes, and some other liabilities also are included in this. So 14,000 crore worth of liabilities are currently with ITC. So even if ITC goes down and is completely shut, it can pay off all of its liabilities and still be left with a lot of money. So you can see that even if it sells all of its assets, which is 77,000 crore worth of assets, it can still pay off easily 14,000 crore worth of liabilities. So that is why ITC is considered to be a cash cow. It has a lot of cash and not a lot of liabilities. So the next thing that we want to talk about is total equity. Now equity basically is total assets minus total liabilities. So we have already discussed about total assets, which is 77,000 crores, and total liabilities is 14,000 crores. So if we just subtract it, this is the number that we'll get, which is 62,000 crores of total equity. Again, if you see the trend, ITC was not performing as well in 2021, and it again bounced back in 2022. So apart from that, we have the next thing, which is debt to equity. Now over here you can see that debt to equity is given as 0.01 throughout the year, and this is because ITC has negligible debt when it comes to the equity that it possesses. So equity is around 62,000 crores, and the debt that they have is almost negligible in comparison to that, and that is why this company's debt to equity ratio is quite less. After that we have cash flow. So cash flow basically helps you understand if a company is self-sufficient or not, whether it would require debt in order to survive or not. So over here you can see that currently the opening cash balance of ITC is over 20,000 crores. Now because ITC is in the FMCG sector, as I mentioned, FMCG companies generally have a very high cash flow. So these were all the financial data that I wanted to talk about in this particular video before choosing a company. Now, of course, there are a lot of other factors that are involved in choosing a stock as well. Apart from financial analysis, you also need to do a sentimental analysis. If people are not ready to buy ITC, its stock prices won't go up at all, right? So this was the total current analysis of ITC. We've talked about all the different things. So this was it for this video. If you like this video, then do press the like button. Wait for the third episode in this series. Let me know in the comment section below what you want to see in that video. And subscribe to this channel, press the bell icon for more such content.